you. I need a hate to take it far, make moves. Had somebody trying to take it down, place for you just scoring mines past the bar.
All right, ladies and gentlemen, I got your watch list coming in December 17th, 2019, and I'm going to buy these 3 stocks tomorrow. And actually, I'm going to present it to you in a different way because I have 3 stocks that I'm looking at. I have the exact option plays for you guys. If you've been watching from last week, those UNHs hit 1,000%. We have the other 1,000% Shopify we're holding. We have stuff like that, and there's contracts and companies that I want to watch, but I'm also going to talk about trading volatility, and not really trading volatility, but more or less trading these all-time highs. I have 2 sets of plays. So I already bought one of these plays right before close. We're going to talk about that. But then the other 2, I'm going to watch and try to snipe them. But then I have another set of 3 other plays that I'm probably just going to throw my hand in the cookie jar for tomorrow. It's getting an interesting week. We hit more all-time highs. We had the trade updates. We're seeing that melt up. I still think we have a gap up in the cards, not necessarily for tomorrow, but maybe in the coming week or even coming into next week. But there's a lot of things going on. So we're going to talk about that. We're going to go over the plays. We're going to go over what we did today and then discuss kind of the logic and approach of how we are going to maximize our opportunities. I hope you guys are ready. There is opportunity right around the corner. That is the sign and message we got today. You guys came in the chat. You held it down. You were positive, respectful. You guys were just way too cheerful. It was weird. It was really, really weird. So congratulations to everybody who played. Y'all feeling good the end of the year. Happy Christmas, Merry Holidays, whatever you want to call it. It's all up to you. But we got a year to close out, and there's a lot we need to talk about. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. We're trading live. So when I do make these plays, you can watch it, and we'll go over the logic. And even one of the plays, we spent a lot of time on it today, and I'm going to share that logic with you guys here too. So if you missed it, you watch the watch list, and we also got the stream alerts throughout the day, but you see how we're recapping it. So just come here, and then don't forget the most important thing, baby. Post your watch list below. We went over all of them this morning, so share them down here. Let's source that info, and yeah, let's get into it. So there's a few things we need to talk about. I have the keys for you, but essentially today, there's one, the movement we saw with the market. We gapped up, it went up, and then it kind of looks like it did nothing, and this is a big thing we're going to talk about, but we saw the trade war back and forth occur kind of like we were expecting. We saw, I believe it was Kudlow, he said that the trade deal is going to double the exports to China. They made positive news, and this is what you guys are going to start seeing because we're kind of already seeing it. You're going to start seeing phase 2 optimism. So now it was trade war optimism, trade deal optimism. Now it's phase 1 optimism. Now we're going to phase 2 optimism. So this is what I was telling you guys. The market moves very, very quickly, and that's going to even explain how we need to trade these moves and what's happening. But it just went from pricing in the Fed, then pricing in the trade deal and what's going to happen to now once it gets that, it took, 2 days off, and now it's already looking at the next thing to price. This should tell you something about future pricing. What's going to happen in the future in these events, it gets involved and it's priced in. So a lot of the times you're paying for future price and valuation. So that's why coming into the end of the year, 2020, all of this stuff is important. So there's that. And then the next part, this is where this repo madness I was talking about, and this could outweigh, hopefully you guys understand the force of what's going on here. We are kicking off the bank tax season. So this is when the banks go and do their taxes and have to do all that. So this is where that liquidity crisis come from, or that liquidity issue. So this is where the Fed is stepping in. So this is going to ease all of the markets. And now we could talk about this in many ways. I think what people need to understand is that it's kind of crazy to think about that if this didn't occur at this moment, we would probably have a liquidity crisis and volatility, but we're not. Some people are it's due for a crash, it's this and that. You're pretty much witnessing what should have made the market drop around this time coming in from September, because again, September, and back when we saw the first repo rate issue, that was with our taxes, the citizens. Now you got the bank taxes. Those aren't good, and that could have upset something. But given they had a solution, they're stepping in with this repo thing. It's working. The key is it's not that it's this, it's stopping this. As long as the solution is quote unquote acceptable, they'll do it. You have to think acceptable versus does it mean there's other ways to do it? Sure, but this was the most acceptable. Is it acceptable to just let the market drop? No. So keep that in mind. But this is fueling a lot of the bullishness coming into the end of the year, and kind of even now, hand in hand with that theory we've talked about, a lot of the checkpoints of data we need to see to kind of confirm this bullishness, they're getting checked one by one. So anything could still happen. We're going to watch out for that, but I'm going to start getting my hand in the cookie jar. That's why with these plays and everything, hopefully you're there. Hopefully you got your stream alerts. We're going to have some fun this week, and we're already seeing that come to life. So there's that, but now let's talk about the keys. Understand the melt-ups. Understand how things go up when the market is already up. This is a big key. Most of the moves are going to happen in these gapping up moves. Today was a slight gap up. You don't really see it too much on the chart, but most often than not, the move is happening pre-market. It's gapping up, and then it's staying there. But it looks like the market is doing nothing, and this is discouraging a lot of you traders out there. Don't be. This is an opportunity. You know, some people think the market isn't moving. I put is, but it's moving in a very large fashion right before your eyes. The difference is we're watching it every minute, literally. So you have to watch out. Most of the moves are happening here, and then it's scaling back, but then most of the moves are going to happen in that early morning. There is going to be an opportunity for things to happen throughout the day, but this is where swing trades and kind of the timing is going to be important. Maximize your time in the mornings. Don't get too jumpy throughout the day, and then set up your positions for the next day at the end of the day, and that's where you guys got to think about it. But this is what I said, the opportunities there. Do not quit. It's right around the corner. If you're giving up searching when it's like this, you're missing out, because what happens is when you get these gap ups, the prices of the options go up, but then when it starts coming like this, they're going to start falling harder, even though the stock price doesn't go down much. And now that's going to create the next opportunity and what we're going to look for. Some of the best plays out there right now are going to be found in the plays that have already moved and moved up. So it sounds very counterintuitive, but sometimes the options on the call side, if the stock is up, it becomes cheaper because people don't think it could keep going. But you're not going to get that when it's rocketing up like this. You have to wait till it goes up. It's going to come down a little bit or come down around here, or even off of the second drop or whatever it may be. Again, every day is going to move different, but get used to some of these days where you're getting the big move there, chill out through the rest of the day, and it's going to look like nothing. But the scope and size of these moves, one, this is a broad index, which is huge, the S&P, but you're getting big individual names and individual movers. So we could find plays that could still keep going up, and that's going to be one of the ones I'm sharing with you today. And lastly, there's a big opportunity right around the corner. If we still get that end of the year rip I'm expecting, this was a pretty good portion of it if you think about it. That's 5 points in the last 3 days. But look at the volume. I mean, big things could still happen here. And then again, if anything happens with the repos, there's still opportunity left and right here. This is going to be something. It's a weird game of musical chairs here. I encourage you. Control the bounces, but don't cheat yourself. Control the expectations and let it come to you. Don't force it. And just because you miss one thing, I'm telling you, there's another play right around the corner, even with the same stock. So keep your eyes out for that. And then if you don't have too much time on contracts too, even if you're in plays, be smart with them. Use the ghetto spreads, roll them over till next week, take some profits all the way up and be smart, but utilize your swing trading advantages in time. So that's pretty much it, man. I hope you guys are ready for it. Be there. It's going to be exciting, but keep those keys in mind. But understand you're going to see this tomorrow morning with how I'm trading it. How do we trade this volatility? And it's kind of just upwards volatility. How do we trade the melt up? So make sure you're on the stream, be there, do all that. But let us get into the plays. So here are your 3 plays. It happened even right after news. I don't know. We got a little lucky here. It dropped, but they did confirm. So if you guys remember yesterday's watch list, I said something's going to happen to Boeing. I screamed the triple bottom, and it dropped. It plummeted a big amount, 5%. But then even after hours, it dropped even more. It dropped yesterday on the news. I told you guys that they're considering halting the 737 production. And then today after hours, they confirmed it. It dropped a little bit more. So I'm expecting one more down day with Boeing. But now, here is the play. I scroll up a little bit. Can't show you the other one I got. But the explanation on it, I'm going to talk about that because it requires an explanation. But in the next few weeks, Boeing is going to be a great opportunity. Both sides. That's what we have to understand. Now, I am more positioned towards the downside, but I do want to start taking advantage of credit spreads here. But now, since this news gave us one more day of continuation, probably, we're going to have to see. But the play I got here was a Boeing 300 put and a 290 put. We bought the 300 put, sold the 290 put. It's a debit spread for next week, not this week, and it was 35 cents. So this is the key too. Try to spread them out. If you saw our Shopify play, when you get them too close, you could have got this play cheaper, but a closer spread. You want to kind of spread these out, especially with Boeing and the moves it can make. But the key is not spending too much because the contracts are inflated. But now, Boeing's IV didn't go up that much. This is what some people were saying. And that's because people have seen it drop and people have seen this happen before. Then it comes right back up. One, this is the biggest volume in 100 days. This is very important. It's literally almost, it's half. It's literally the only thing it comes close to is one of those first drops coming in from last year. So keep that in mind. But It's at a crucial level. They have a lot of support here, but they don't be surprised for them to kind of bounce out of nowhere. And a lot of people said people might sell off Boeing because of tax loss harvesting. No, that happened last year. They were down, but people even bought it up coming into that last few weeks. So it did sell off the few days and then came back up, but that was with the Fed as well too. But watch Boeing. But here's my thesis on this now. I think it's going to go down, and this is why we got the put, because there's a lot of downside pressure to it, but at the end of the day, they're halting the 737 MAX production. We were listening to that earnings call. We covered it a few months ago. We listened to all of it. And the thing about that earnings call, they kept discussing the return of the 737 MAX. Literally, their whole entire guidance was based on the 737 MAX coming to production. So now it's halted. That means their whole entire guidance has changed. So until the market gets more clarity, and that's the thing now, that's what's going to cause it to go down. Next part two is the rotation. Anytime we saw this Fed rotation, people rotated out of Boeing. If the Fed's pumping in money, they're going to dump Boeing and go to something else, or they might hold it up. And that's why I think Boeing has a chance to bounce up and hold kind of back at this 340, maybe even a 330 level. But that's what makes me want to sell spreads and makes me think it won't go down. But the 737 MAX stuff, again, with that guidance changing, could drop the whole thing down. And that's what we're going to see now. And this is what could even make it pop up randomly. But day after day, we're going to get more clarity. So as there's more news that comes out on Boeing related to how it's going to affect their future guidance, because this news now changes the past guidance and investors are kind of lost without a clue now on what the true guidance is or any direction, the stock is going to move until that happens. So get ready for volatility. That's going to be a good play. The contracts are expensive. There's wide spreads. How you're going to have to take advantage of it is with the debit spread. So if you don't know how to do those, check out the videos. Debit spreads allow you to get closer to the money, get a higher probability, higher quality play while spending less, but it'll cap your max gain. But even in this case, $30 max gain of 1,000, we'll take it. And then we also, we'll see how these next few days play out. So that's the first play. The next play is the UNH, and it's the same one. So if you guys remember, I gave this to you guys last week. If you don't recall, I remember I said PMAC was asking me for those YOLOs. I gave it to you, but I gave you a remix. I said just add one more week. But if you don't remember, I said anywhere from 290 or even 295 to 300. But if you don't remember, I called out those ones that were 8 cents. I think it was the 295 even. Oh, that's dirty. Yeah, they were like 8 to 10 cents. It was crazy. We even had the 300s on there. They made a crazy move today. UNH ripped again now. That had to do with the pricing and then the confirmation and all this other stuff we're seeing come to light with the Fed and all that. But now here is the next part of that strategy I was telling you guys, factoring it into what's going on here. Why am I putting this play up here again? We're going to look at the weekly. We could look at next week, but UNH moves like this. It's going to skyrocket up, but now every single day, remember, UNH isn't a big mover. So as it slows down day by day, or as it rips up and then comes back down and then kind of just hangs out at a higher price, it could start edging up $1 or $2 a day, but it's going to move at a slower pace than what it just did. So what's going to happen, some of these contracts, 295 and 300, they're going to depreciate. So these are the ones that we could go for both the frog, but wait till they come back down. I said 295 to 300 because the 300s are going to be the ones that are most likely going to depreciate and come back down to the cheapest price. And even if you look at them, even this morning, they were going for 8 cents, even 20 cents at one point. So they closed only at 40. We wait till these come down, but then the 295s, these were at 40 cents this morning. We need these to kind of come down even more than that, but these are the most likely ones to kind of get in the money. But UNH is that's only $2.50 away. So watch these, and these are the ones where I'm saying even if we missed it, I didn't end up playing it. I know a lot of you played it. I was too patient. It doesn't mean my opportunity's gone. I'm going to watch these, and we're just going to hunt them and keep an eye on them and just show discipline and be patient and let it come to us. But that's the next one. I like that play a lot, and I'm going to keep my eye on there. And then lastly, HD. So this is one I wanted the McDonald's, and we've talked about the McDonald's, but today I was looking at the credit to collaterals on both spreads, iron condors. It wasn't really there, and McDonald's didn't go up as much. I'm surprised McDonald's didn't go down, but that wasn't good enough for me. However, HD's taken a little better of a bounce there, 0.5%, not too bad. But last time McDonald's rotated, people rotated out of it, and then people rotated it into Home Depot. I think following their earnings, this could be a good one. So I like my target is the next week 220, but those are going for 70 cents. I think it could go up to 220, and if there is, again, this is why I'm saying it, you're seeing big individual moves, but some of these bigger, slower mover, value stock type, value momentum stocks, they didn't move as much. So if the market doesn't move as much here, we might see some of these take the reins. I think it could go 220 by next week. However, the 225s can be played and they're cheaper, but they have a lower chance of hitting or a lower probability. So when you look at them, those 220s are 70 cents. Again, they were a little bit cheaper here today, but I like those, but I really like the 225s. And now if these come down, or if it's the same logic, if HD goes up but doesn't go up at a faster pace, these will get closer to the money and stay around this price. But I don't want to spend too much on these. So those are the 3 plays, and hopefully you can see. We already got the Boeing. You're going to need to monitor that one. UNH, we're going to need to snipe and stock that one. HD, kind of the same thing. Now, the other set of plays, this is what I mean by tomorrow. If we keep getting these gap and rips and all this in the theory and everything's showing true, I want to get my hand in the cookie jar on some stocks. And again, there's some stocks that are up. If we find the right opportunity to get bullish plays, while at the same time the contracts are cheaper, then we're going to do it. But the cautionary part is that we have to watch out not to play too much. You can't get ahead of ourselves. And so keep that in mind too. Give it a day or two. It's going to start getting a little bit more confusing here. But the plays I like, Disney now, they're following ex-dividend date, so now they've got that out the way. They had the earnings. You're getting a lot of new data coming out from the Disney Plus members, all the way down to Elsa and Frozen 2, $1 billion sales, yay, or $1 billion showing or something like that. But I like Disney. That's going to be one I'm going to watch. Then Walmart, they're now, remember, post-earnings. Remember 120. They haven't moved from there, and now they're coming back up with volume. They're a slow mover. They've held up. These could be good, and some of those contracts are going to be cheap. So I'm going to be looking at those tomorrow morning. Somebody remind me on those. And then NVIDIA. All the chip makers are going up. They're all very bullish. They're moving up individually the most, but not NVIDIA. NVIDIA, you know what I'm saying. You guys get it. So, no, you can't call it that. No. But I like them, and they're one in the fashion where it's going up. You guys know my ratio on that, so I'm going to keep my eye on there. But I like Walmart and Disney as well. Those are very, very close seconds, so we'll see. We're still in those Bank of Americas now. We're going to watch that. But, yeah, I'm getting to the rest of the plays. I've already covered the ones. Those are the 2 different sections. So, as far as everything else, we've got to keep our eyes on it. We're still in those Bank of Americas. Those are up, and those are fluctuating a lot too. These low-key remind me of TLT that last August because they're going up and down, but there could be a bigger, longer-term or a longer-term swing with these on the upside, so I'm going to keep my eyes on those. And then also Microsoft, don't forget about this. Apple's going crazy. That one position is wrecking me, but at the same time, market cap-wise and growth, Microsoft is making some big moves. It's doing it steady. There's volume. Don't sleep on them. They could be good, and that's one that's up that you could find cheaper. And then we're going to have FedEx earnings tomorrow, so watch out for them. They dropped today on Amazon News, so I think regardless of once they have their earnings, this is going to be a great continuation play. Once you get the earnings out the way, people are going to start pricing in earnings as well as now that news we saw. So watch them. As far as everything else, I'm going to watch the Shopifys. We're up on that play. Again, 900%. I'm going to look to take profit on that probably tomorrow. We got to see how the contracts are and where we're at. But I like that play. And then I'm also going to be watching Anthem. So if we can't find a play on UNH, Molina looks the same as well as I think Cigna's a little higher. But you might start seeing some of these healthcare, the bigger healthcare companies take a run up here too. So I'm going to be watching those with the close eye. But Anthem's pretty hard to play at times. And that's pretty much it for this chart. And then lastly, we were looking at the long term. I was going to make some plays, but I didn't want to force it. So I'm going to be watching Snapchat. That one didn't move as much. We have that on the long term. Beyond dropped, and now it's a big note to pay attention to what actually went down today and didn't go up. That's a big key. And then we were looking at the IRM. Those were down and came up. I might grab some, but we're going to see. I have to be able to see what's the best opportunity to buy long. I want to grab some stuff, but I was like, well, I've already waited this long without deploying some of that capital, so we'll just wait and see. And then lastly, Tesla. This is not from long term, but even a trading perspective, it's up at a very big point, and this will be really pretty much testing all-time highs if it could get like above 385 or something like that. So people could be going crazy on it. It's a different time for Tesla as well, so we will see. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you in the morning. Be positive and respectful and keep your head in the game. Opportunity is right around the corner. Do not cheat yourself and quit too early. It's what you will get whatever you see. If you say there's no opportunity, the market's not moving, you will see that reflected in your account. But keep your eyes open, keep your head in the game, and focus on these. And snipe, don't force it, and make sure you get the right price little by little. Scare, control the positions. You know all that, man. Let's go. It's the Colt, baby. Stay blessed, you're blessed, and let's go!